Marriott Hotel in Islamabad, Pakistan was the scene this morning again of some more emergency activity. A fire this time erupted at the luxury hotel. 5 people were injured. This is, of course, 2 months after it was partially reopened following the suicide truck bomb attack that killed 60 people. The blaze apparently broke out on the second floor where repair work related to that truck bomb attack was underway. The people who were injured were mainly laborers. Apparently it was caused by some sort of an electrical short circuit. Some of the protective measures that have been taken to prevent further attacks after that suicide bombing seem to have hampered attempts by the fire service to extinguish the blaze. The Marriott has since been surrounded by a massive bomb-proof wall, and visitors are guided through metal detectors and an X-ray machine, as well as a somewhat circuitous, labyrinthic approach through concrete barriers so incoming trucks can't build up speed. Apparently the fire trucks had some difficulty getting in close. Yesterday, in front of the House Banking Committee, Federal Reserve Board Chairman Ben Bernanke said that it would be, quote, a useful idea to create a federal charter option for insurance companies, particularly for large, systemically critical insurance companies. The Fed chairman was before the committee giving his semi-annual monetary policy report. In response to a question, he said that the option of a federal charter for insurance is complex and there are a lot of issues involved, but to cut to the bottom line, I think it would be a useful idea to create a federal option for insurance companies. In general, I believe that holding company-level supervision of large systemically critical institutions is very important. That's very interesting news. Australian P&C insurer QBE has posted a solid 2008 performance compared with its peers, with after-tax profits of 1.86 billion Australian dollars. This as investment losses were offset by foreign exchange gains. In what the company described as, quote, a remarkably strong performance, given the financial crisis, QBE's profits were just 3.5% down off the record of 2.17 billion Australian it booked last year. The positive impact of the low Australian dollar against the American dollar resulted in QBE booking large pre-tax foreign exchange gains of 400 million plus Australian in 2008 as it benefited from its North American expansion. The Brisbane Times is reporting this morning in Australia that the Insurance Australia Group says its reinsurance expenses are poised to rise because of the large level of payouts over recent years, including those after the Victorian bushfires and the heavy storms that have battered eastern Australia. These comments were made when IAG disclosed a 96% drop in first-half profit due to a run-up in payments and losses on its portfolio of investments. Net profit for the December half of last year was $4 million compared with $110 million last year. CEO Mike Wilkins said that 2009 was always intended to be a year of rebuilding. This was for the nation's biggest general insurer in Australia after years of declining profitability. Finally, the Columbus Post-Dispatch is reporting this morning that Gen Re, the General Reinsurance Corporation, has agreed to pay $72 million to settle a securities fraud lawsuit brought by the Ohio Attorney General's office against AIG. Gen Re is alleged to have participated in a fraudulent $500 million reinsurance transaction with AIG that allowed AIG to improperly inflate its loss reserves. And if this is ringing a bell, it should. This is the same case in another venue that was prosecuted in Hartford, Connecticut in federal court that resulted in guilty verdicts for a number of executives. According to the Ohio Attorney General, when the truth about this fraud and other AIG manipulations were made public, the price of AIG stock declined. Investors, including Ohio's state pension funds, had been deceived and as a result suffered financial losses. The state took action on behalf of AIG shareholders, including the Ohio Public Employees Retirement System, the Ohio State Teachers Retirement System, and the Ohio Police and Fire Pension Fund. Once the settlement is approved by the U.S. District Court of Manhattan, the money will be distributed among those who purchased AIG securities between October of '99 and April of '05. And in London, this is a bit interesting, despite a stellar set of 2008 results that include a 13% rise in pre-tax profits, RSA is going to cut 1,200 jobs in England anyway by mid-2010. This is part of a £70 million cost-cutting exercise. RSA said that the cost cuts would result in a one-off reorganization charge of £80 million in its 09 accounts, but it's part of its goal of slashing its expense ratio from 33.3% in 08 to just 14% by the end of 2012. So, overall, RSA reported pre-tax profits of £759 million, up from £670 million. This mainly fueled by strong underwriting that increased 38% up to £384 million. Operating profit was up 7%, but they're still cutting the jobs. Their shareholder funds value actually increased 25%, but they're still cutting the jobs. Very interesting. We'll see if we hear any outcry from some people in RSA. And now, the Royal Gazette down in Bermuda, which, as you know, we watch closely. It's a very fine newspaper. If you're in Bermuda and you want to know what's going on, it's really the only choice you have. This is an interesting place. Some of you watching this will recognize it quickly. This, of course, is the Chicago skyline. You see the red brick building a little bit to the right. That's the CNA building. The big building in the center is the Sears Tower. And just subsetted there, I think you can see the beginning of the Hilton. And then the next picture, of course, is also familiar to a number of you. There's St. Paul's Cathedral a little bit to the right. That's London, seen from across the Thames. But the Bermuda Gazette is reporting that the lure of an expenses-paid trip to London and Chicago, plus as an insight into the international insurance industry, has only attracted 4 student applications for 12 spots. The Bermuda Foundation for Insurance Studies, the BFIS, has thus extended the deadline for its summer intern program to March 6th. It's trying to sign up more Bermudian college students. The executive director of the program, Ms. Catherine Lapsley, said, "So far I have only 4 applications. There are another 2 who said they were going to submit me an application, but they haven't arrived yet. I've tried everything. We've spent a lot on advertising. I don't know what else to do." The program sends one group of 4 students to London for 2 weeks to experience the insurance market there. Another group goes to Chicago for 2 weeks for the same purpose, while a third group studies in Bermuda for 3 weeks. All travel and accommodation costs are paid for the interns traveling overseas, and a stipend is added. According to Ms. Lapsley, they get to meet insurance professionals at all levels, even up to the CEOs. The program is open to students who are in their junior or senior year of college. Full details may be found at the BFIS website, www.bfis.bm. And if that internship program is not filled up, we may apply. That sounds like a pretty good deal. Hurry up, contact Ms. Lapsley. I think that's something that's too good to pass up. Stock market is up about 76 points now. If we have any breaking news, we'll come back and see you. If not, we'll see you tomorrow. Thank you for watching.